Welcome everybody to week 11 of our little lesson series. I'm glad everybody's joining me today. If you've been to the last few, this one, we're keeping same theme, just kind of talking about the market in different ways that I just haven't seen talked about online. If you're new, that's a good little intro for you. But this week specifically, we're going over market structure decoded, right? Reading the big picture. We're going to go ahead and get started. In the first slide, I'm going to ask you guys a question. How much skill does it take to win a trade, right? Everybody, think about it for a second. Zero. So it actually takes zero skill to win a trade. And when I say that, I really mean anybody can click buy or sell and it can go to your take profit with zero skill, right? So, and then below, I'm gonna read that off real quick. In a world, trading, where it requires zero skill to win an unlimited amount of money, it can go as high as it wants, it can go as low as it wants, coupled with the fact that it seemingly takes an unbearable amount of that same skill to hold on to the money, it can cause many people to lead astray. However, to hold on to that money, that's where the skill kind of comes into, and that's what we're going to go over today on the skill side of it. So, next, what is the skill that's required? And I've got a few little common things that I'm sure you've heard terms before, patience, technical analysis, luck, risk management, and then a few at the bottom that are, specific ways to trade, DCA. Are you buying into a losing position, hoping that it goes back up and you can, get a more sizable return? Scalping, are you in and out real quick? High R to R, do you believe low win rate or even 50-50 win rate, but getting super high returns on those winners? Is that the way to go? Right, so any single one of these are important, but I feel like a lot of people put some of these on a pedestal that they really don't deserve to be on. Okay, so let's try into the next one. Just ask yourself, what is important to you? Technical analysis or mental analysis, right? So I'm going to pause on this one for a minute and we'll go over technical analysis really quick. So I'm going to switch over, going over this real quick, right? When I talk about what I started this stream with, some of the basic concepts, but looking at it through a different light, right? Decoding market structure. We'll just take this blanket screen. This is today, right? We are on the 5 minute, right? Just random chart kind of on the micro NASDAQ futures. So I'm going to place a level at about here. Okay. I feel like this is a fairly respected level. You can see we had it perform as support over here, broke through, act as resistance. Hold below this level, doesn't quite touches here, comes back over, and then right where we had a little bit more volume today, wicks up and then back down, and now we are just breaking it. Look for extra confluences, and I talked to Reality about this a few days ago about, the way he trades, and I'm not going to go over his strategy or anything just because I'm not super confident with it, but some of the key points with it is, if we take something like this right here, where we have this strong wick, read into this more. Don't just say, well, it rejected the resistance level. Why did it reject the resistance level? Pulling back just a little more, we can see, okay, a little bundle of consolidation, a little bit of a range, comes up, breaks this high, we're coming back up. This wick right here, I would say that this is the opposite down here of this wick up here. So we can read into this and say, okay, well, it came down, we wicked the bottom down here, and then it rejected harshly with a strong push straight back up to the top. So we have this new level right here after it broke the range. These sellers came down, they saw that it broke the level, they entered, and their stop losses are going to get put up here or somewhere in this range, and we can assume that it's going to be over the highs as a confident level, and everybody pushed down. And the reason we had this huge flip back up is we had a transition from the sellers getting a good strong push, they sold, as well as buyers seeing it reject, start to enter and fill those orders as we push back to the top. A little bit more of consolidation, but we know that the buyers won this little charade because it pushes back up high. And they had the inverse happen up here. So the sellers made their money down here, or lost if they entered too late, sold or got stopped out. Buyers came up, the exact same thing happened here. The buyers sold, or it came back down and got stopped out, which pushes it back down here. Holds this level in the middle of this previous range, and we push back up. Right? So we're still talking about all these skills that are outlined here, right? Patience is a big one, especially for the strategy I'm showing, because we have to say, okay, well, instead of just doing what we're taught, which is, short at resistance and buy at support, we're waiting, see what the other players in the market are doing. Maybe they think that this level is about to break, because the market's never wrong. The market cannot be wrong. You can't change it. Just because you think it's supposed to go one way, if it goes the other way, you were wrong, the market was right. Right? If it goes the way you think, the market's right, you're also right. This is a lose-lose game when it comes to trying to be right all the time. Okay, guys? Okay, so hopefully, we're getting a little bit deeper into that, thinking what the other players are doing, right? Talking about decoding that market structure, understanding that it really does take zero skill to just win a trade, but to keep that consistency long term, that's when we have to think about it a little deeper and understand that these aren't algorithms that are trading the entire market. It's people. Sure, there are algorithms that are involved. Most of the higher up hedge funds, they do use algorithms, but at the end of the day, it is still people that are moving the market. And it's retail traders that are looking at things like support and resistance, that when their trade doesn't hit, meaning they short at resistance, and it decides to flip over that line, that's when you have to start asking, oh, okay, well, are the breakout traders about to win? And if you want to add an extra level of confidence to it, so the resistance breaks, right, comes up, and instead of just trying to buy the breakout, look to see if that breakout candle flips. If it can flip back into that area, we know it's still holding, so all those buyers are then going to get stopped out, and we're looking for a volume push. If there's no volume, how can we be sure that it was really a breakout? To this one, mental analysis, right? That's what I'm going over. It's we've used the term discipline before, right? This is a little different, right? Mental analysis is going to be exactly what I'm talking about, and it's thinking about what the other players are doing. It's not all about, well, I'm going to have my strategy do this, and I'm going to aim for this TP, and I'm going to get out here if I get stopped out. Like that's great. That's a great way to trade. But there gets to be a point when that's a bit redundant, and when it's all about me, and my strategy, my take profit, my stop loss, when you have no influence over the market, that doesn't make sense. Why would you put everything around what you think is going to happen when the only person that's right all the time is the market? For technical analysis, right, we just kind of talked about it. These little pictures or screenshots that I have below, these were trades that I took. They're examples of my strategy. We can see on the first one, that one on the left, tall green candle, we can see, I believe that was the open candle. So bottom left picture we're talking about, strong open candle, comes up, wicks down. Next candle that opens, pushes down, rejects. Right, so again, this is another example of we had buyers enter the market right at market open, right? So we know the bias for the day is green, at least for that short little 5-minute time span. It's been green. We get to be more confident in the fact that it's going to be biased towards green because that red candle shoots down and then pulls right back up to almost be a doji candle and closes above that M4 level, followed by another green candle that does the exact same thing where it pushes down, rejects, pushes back up. So not only do we have open candle bias green, following candle pushes down and rejects harshly, so the buyers are killing, and then the third candle, once again, we have killed all those short sellers. So anybody who has tried to short this market, meaning fill the gap on that first open green candle, they have been stopped out not once, but twice now. They don't want any part of this. The buyers take over, we get to ride it way up and get TP right underneath that final resistance level that you can see above there, right? So this next one that I put next to it, right, I just kind of put it there as an example of part of those two. So you can see the two arrows that I have pointing, right? Both are the exact same setup. The first one, right, it's same setup as before. This is a different day as the other picture, but you have that green candle, strong open. That's also the open candle. Yep, followed by a red candle, followed by a green candle. So it's not as prominent as the first picture that we can reject that bottom, right? It's definitely not as prominent. We're not getting those two doji candles, and we definitely don't have that strong top wick on the first candle. So we're missing that. But then to add to it, we have an unfilled fair value gap below it, as you can see outlined in that pink and green box. So we don't have any strong, rejections towards the top, but we also have something below that's going to drive us to maybe it's going to go lower. But again, in our favor, it moves up. pulls back down, and that would have been about a break-even trade for me right there. Now that next trade, I know it's even harder to see, but we can see it comes up. We have that strong runner of green candles that were in the first trade. And then we get followed by one pullback, two pullback. And if you watched our introduction to the RV, my strategy, if you watched that live stream, you'll understand what I'm talking about when I say followed by a bunch of green candles and then two pullbacks into that third one. Right, that third pullback not only fills that previous fair value gap that we had created there, it's smaller than the other one, but it's still there. Right, so it fills that gap, but we also know that it's a stronger pullback. It touches the previous high, so that open candle high, that's going to create a level for us, bounces, and then it pushes up. We've got a smaller stop loss, and we push the higher. So again, this is not an example of I'm telling you, well, you shouldn't take the first trade, you should take the second. I'm not saying that at all. If I was put in this position, I would have taken both of those trades, break even followed by a win. That aligns with my strategy. Moving on. Mental analysis, again, I think we already talked about it plenty. I've just got this kind of thrown into come back to it from technical to mental. Listen, it's important that you stay disciplined. It's important that you have a strong psychology. Any of these buzzwords that we hear people use far too much. However, this is truly the separation of making money. Again, zero skill to make any money. Zero skill. It takes none. It is the exact same as going to the roulette table, putting it on black, and saying, I hope I win. Right? That's a singular trade. Right? It takes zero skill. You can add skill to it and increase your odds, of course. Right? But as far as actually just winning or losing a trade, zero skill. But then keeping the money, right? It's where it matters. If you know the odds of roulette, right? I believe it's like 47, 48% if you've got double zero, and then it's worse than that if you got triple zero, right? You know that with those odds, you can't win over the long term, aka you can't keep the profit. Right? If you go to something like the blackjack table and you know how to count cards, well, now you can increase your odds. Even though the game is set against you, your odds are 4.5%, or the house odds are 4.5% in their favor, right? The odds of you actually keeping the money just playing blackjack are pretty low. But if you could place something in your favor, right, the more you can place in your favor, you can grow that edge, or you can play advantage blackjack. That's how we keep the money. We do it over a long span of time, and we put little things in our favor. Thank you, Reality, for hosting today. It's always a pleasure. We'll be back here next week, Thursday, 1:30.